is this really going to be a trick or a treat with this Halloween right around the corner? There's no question that investors have been pretty spooked by the inflation, monetary policy concerns, and it's pushed U.S. equities into a bear market, Frank.
Yeah, absolutely. So Craig, I want to ask you. You were actually pretty bullish last time you were here on WEX about a month ago. You said your year-end target for the S&P 500 was 47.75, a more than 25% move to the upside from where we are right now. But again, that was a month ago. Has your price target changed at all? And what are you seeing in the technicals now that's informing your opinion?
Yeah, Frank. So we did lower that price target to sort of kind of market to market in terms of where we are for year end with a little less than 60 trading days left to go this year. So we lowered it from 47.75 to 3,900. But what I got to tell you is I still think that there's upside in this market for a couple of reasons. And there are a couple of catalysts out here for what we think could be a pretty decent move into year end. First and foremost, there's still a lot of cash on the sidelines. When I go through and I look at how much cash is there, we're talking $4 trillion. That's $900 billion above where we were pre-pandemic, Frank. We also have got seasonality coming up. Whether people like it or not, you go back and you look at the numbers, and historically, post-midterm elections, you tend to see a pretty strong October, November, and December. And then third, I'll just point out in terms of market breadth, it is really at very, very depressed levels. Now, you can't say that there's capitulation is fully in the market yet, Frank, but when you start looking at where you're at with cash, where you're at with market breadth, and also the fact that the AAII bearish numbers at this point in time are at the 99th percentile, you have to step back and say, this is probably a good time where we could see a relief rally or something more in this market.
All right, so you're saying the technicals are showing that we could see a rally. So my question for you is, if you're an investor, especially someone who's an index investor, we're seeing a growing portion of people in the market being index investors buying the S&P 500 index. Is right now the time to buy the dip? I mean, the S&P down about 22% from its high. You're saying the signs all point to it moving to the upside.
I think the answer in short, Frank, is yes. And I think what investors have to do in these kind of markets is you're probably not putting a full position on. You're probably just starting to add to your positions slowly in here. Remember what Warren Buffett's always said. You got to be greedy when people are fearful and fearful when people are greedy. And at this point in time, there certainly is quite a bit of fear out there when you just look at those AAII numbers, Frank.
So we got to talk about it. Your price target is 3,900, but how do we get there? Do we have more choppiness? You mentioned the midterm elections, a lot of other things coming up, more earnings seasons, reports coming up. We got another big one after the bell today with IBM. We have Tesla coming up as well. So how do we get to that 3,900?
Well, I think you're going to get to that from certainly some sort of oversold rally coming into play. And when we look through the earnings numbers, the one thing that struck me yesterday and over the last couple of days, and certainly with the Netflix numbers, there's a lot of negative things out there at this point in time, but stocks are not reacting to the downside. You look at some of the earnings reports we've seen so far, and we've actually been seeing stocks moving higher, not only on analyst price cuts, but also on some of the earnings numbers that maybe were not quite as strong as people have thought. It seems like we're kind of in a point in time right now where the earnings cuts have sort of reset expectations for investors, and investors just did not want to buy ahead of the earnings prints, and we're actually seeing the stocks coming up. So I think a combination of those things, Frank, being at such beaten up levels, can be the catalyst. And if you look at some of the stocks out there that we find interesting, stocks like Schwab, First Interstate Bank, Dino, in terms of the refiners, there's a lot of constructive stocks, and I think you have to at least be adding to some positions in here at this point in time.